Yo, what is up everyone? Today we'll be doing our first investment analysis with you and we are so excited. Before we start, we want to disclose that we are not financial advisors, so we suggest that you do your due diligence before you start investing in the stock market. We'll go over what the company is, how it generates sales, what is our investment thesis, and we'll end with a financial valuation as to kind of set a target price for the company. Today's company is Digital Mediatama Maxitama or DMMX. It is a digital advertising company that provides trade marketing and advertising exchange platform. The company went IPO in October 2019. The stock has dipped around March 2020 because of coronavirus. However, though, it has had a nice run up since then, rising over 200%. And right now, it's currently trading at around its IPO price level. DMMX operates in 4 business segments. The first one is managed service, which they basically sell hardware, operating systems, and infrastructure for digital advertising. And the whole infrastructure is end-to-end. And what I mean by this is that it includes your source device like computers, to cables that distribute and transport signal, and finally the display screens itself. The second is infrastructure as a service or IaaS. And the only difference here is that customers can rent the infrastructure instead of buying. Next segment is Advertising Exchange Hub. DMMX will rent a client's physical space to build its cloud advertising platform. DMMX then generates money from selling advertising slots on the platform to other customers. Lastly, through trade marketing, DMMX launched an app called Pojok Bayar with Sampurna Retail Community. And the app is targeted for retailers like Mini Market and your mom and pop stores under the Sampurna community. Customers can go to Mini Market to pay bills and transportation tickets using the app. The idea is to make the retailers who use the app as a one-stop shopping experience. DMMX then derives revenue from digital vouchers sold through the app as well as exchanging advertising slots as well. The MMX product portfolio essentially entails high-spec screens which can be mounted in clients' advertising sites as backwall displays, posters, or signages, as well as your computers or servers that house the content and the software that runs the content management. As of today, the DMMX has sold 7,100 screens that are used by 5,700 stores in 28 cities. They also have 50,000 general trade stores that use their Pojok Bayar app as well. Among some of their largest clients are your huge supermarket stores such as Alfamart, Indomart, Family Mart, and Lawson. You will also have your conglomerate companies that use their screens like Beca and Jarum. So, how has the company performed financially? Well, as of 2019, the revenue was 211 billion rupiah or 16 times that of 2016. Their EBITDA is 12.6 billion or 10 times that of 2016. And they have a net income of 16.6 billion or 24 times that of 2016. As you can see, this is a numbers of a growth company and we really like their monstrous performance over the last 3 years. Now that you know a little bit about the company, what might make DMMX a good investment? Well, there are 4 key reasons to buy into the company. First is its market size, and second is a growing adoption among retailers. And third, the effectiveness of digital signage as an advertising media. And fourth, the continuous release of new product. First, let's talk about market size. One of the first things that you have to do when judging an investment is to analyze the market size and opportunity. The cloud advertising market was valued at $150 billion in 2019 and is expected to grow to $353 billion by 2025, growing at about 15% annually. Technological advancements concerning the internet, combined with increasing commercial application, have shaped the evolution of cloud advertising. And although North America is still the largest market player, Asia Pacific is still expected to grow the fastest. Now, if we look at Indonesia, DMMX only covers 5,700 retail stores out of 3 million available, or that is about 0.2% of market share. So there is room for growth here. And after doing our research, we don't think that there is a plug-and-play digital advertising company that is public. So if you want to invest in digital advertising companies in the Indonesian Stock Exchange, DMMX is one of the key players. Now that we've touched the market size, let's move on to one of DMMX's customer segments, which is the retail environment. Today's retail environment is marked by huge changes in technology and marketing approaches. No company in the sector can afford to ignore these massive shifts. Indeed, it all fits under the umbrella of Industry 4.0, which is the ongoing automation of traditional manufacturing and industrial practices using modern smart technology. And there are several steps that retailers must consider when they confront the new landscape. And among the big companies are Alfamart and Indo Retail, who have stated publicly that they have to adapt to the digital age by taking advantage of consumer data. In recent years, retail and consumer goods companies focus primarily on digitizing their customer interface. For example, one of the companies under the Indo Retail Group, KFC, has been developing technology to facilitate orders online through their website and app. Now, the digital integration of the end-to-end value chain becomes a strategic priority. This starts with personalizing customer offerings through digital marketing and adopting data and analytics as a core capability. The whole strategy is based on how do you leverage the use of consumer data to ultimately increase sales. So the key takeaway here is more retailers are adopting digital technology in their operations. And as a digital technology provider, DMMX is poised to benefit from this trend. You might be wondering, why do businesses buy digital signage as an advertising media in the first place? It's because digital signage has proven to be an effective advertising media. Digital signage, whether you like it or not, has become an essential communication tool in our lives. As a concept, it is extremely effective because the signage allows you to cater to your audience where they are with the info they want. Along the way, everything is branded so customers know you have their experience in mind. And that is what digital signage is all about. Experience, information, convenience, and building rapport. So, with digital signage, you'll have higher amount of consumer reach, higher amount of ad recall, and in addition to that, the signage also encourages impulsive buys and increases customer engagement. So, what does this mean for DMMX going forward? As y'all know, COVID-19 cases in Indonesia keeps increasing exponentially, and as a result, Indonesia's Q2 GDP dropped dramatically. To counter this, the government has implemented the new normal policy to revive the economy while attempting to minimize the impact of COVID through workplace regulations. DMMX has then seized the opportunity to deploy 10,000 smart detections. Equipped with facial recognition technology and artificial intelligence, the smart detection point can check for body temperature and detect mask usage. This smart detection solution can help optimize visitor control and streamline the checking process required for retail stores to function efficiently and safely in the new normal. These smart detection points will surely increase sales for DMMX in the foreseeable future. Lastly, let's talk about valuation. We believe behind every reason supporting an investment, there must be an evaluation to support it. Otherwise, how would you know if your investment is selling at a good price? Using a discounted cash flow valuation, which is one of the most popular methods to evaluate a stock, we estimate its fair price value to be around 225 rupiah. Now, would we invest in DMMX? Well, going back to our framework, DMMX is a good company as supported by its stellar financial performance and growth, as well as the massive market opportunity. Is it trading at a fair price for investors? Well, according to our valuation, not so much. However, though, we like DMMX as a company and we believe in it. So, assuming a margin safety of 30%, the ideal price at which we would buy is 180 rupiah. So you might be wondering why 30%? Well, it's because we want to avoid loss by managing our risk. And the way you do it is by investing with a significant margin of safety. So how would we play this? Assuming we have 10 million to work with, we will invest in phases. The first one would be 25% of the 10 million at a current share price of about 200-ish. Just in case the price doesn't drop below and we risk a chance of missing the upside. Next, if the price goes down to 180, we would invest 75% more of our money, and then we would invest the remaining 25% if it ever goes down to 158. So that concludes our investment analysis with you. If you made it all the way to the end of the video, thank you for watching. Let me know what you guys think of the company and our analysis, or if you'd like us to cover anything in particular. And we'll see you in our next video.